All right, chicks with dicks, dudes with tits, let's take a look at what's going on here with Bitcoin today. Hope you're all doing well. So, from a daily perspective here, we are still trying to re-accept above the 30-day rolling VWAP. And you can see it tried to get above it, and ultimately started closing below it. And now we're opening the week retesting it, right? So, not a lot of bullish acceptance yet, but it is trying. If we can close the week above this 30-day VWAP, I will flip the tone and say that, hey, maybe it's time to start looking at things a little differently. But as of right now, it is a little bit concerning. As of right now, it's a little concerning that the futures are pretty flat on the open, and we are starting off at this point again. Still looking like it wants to go into that late December, early January range, which is kind of what we've been expecting. So you could even argue this is posting like a bear flag here, right? Bear flags, you know, they come down, then they slowly rise up before ultimately doing something like, this, right? So I'd argue this is still bear flag territory, and it's just ranging right now. I mean, we've shown the ranges, we've shown kind of what's going on. I'd be surprised if this week, especially going into FOMC on Wednesday, we didn't go and sweep at least 85K. So be mindful of that. So what can you see that happen this week? And I put some arrows here on the screen so you guys could kind of get a gist for what is going on. So what do you guys see here, first off? We have a lot of profiles here we're going to be able to combine finally, as well as do the weekly. But what are you guys seeing here so far? So, where did we stall out last week? Failure to get into this higher value range here. Exact 1 block, 2 block sweep maybe? Looks like we got a 2 block sweep into that above value area low before ultimately rejecting, moving down. Unable to hold this 2-day composite here. Failure to hold the value area low, breaking down. And like I said in the other video, we ended up filling these single prints down here. So we can combine this profile here, and we can combine this profile here as well now, but we need to take a look at some other things before we do that. This is our open here, and this is our close. We closed right here at this block, right? What do you guys see going on here? Well, we swept these single prints up here and came down and tested the point of control down here. And we can combine this profile in a second, but we're not going to just yet. Now we're trying to get back above value. If we combine this profile now, what do we get here? The open was under the 3-day composite here, value area high. So this is the open, and now we're trying to see if we can get above it. And again, we're pushing right into this 30-day VWAP, right? So what do you guys see here? All the single prints got ran. So that previous ladder here with all those single prints, we can actually combine now, right? You can see that on this composite, we retested the previous range value area high, and ultimately that's where we bounced from and pushed up. So now the goal is, can we hold above the previous year value area low? Can we hold above the previous year value area low? And can we finally get a yearly open above here? Going into FOMC week, I'll be the first to say it. This is very volatile. Like, you're going to see some big volatility, I think, coming up. I would not be surprised if we just pushed up into this point of control and fell back down again. If we can get a weekly close above this 30-day VWAP, I will change the tone and say, okay, maybe we can go and test the 365. But again, we have no closes above this, and we have no acceptance above the yearly open, right? Let everyone battle it out in this range. If you've missed the short from being up here, don't even try, right? If you missed the shorts from up here, don't try, don't be in this range. If you missed the longs from down here, don't get caught in the middle of the range, right? Right now, this is, if you're not positioned already properly, do nothing. Sit on your hands, don't paper trade, don't panic trade. Well, paper trade if you want, but don't panic trade, don't chase, don't FOMO. Okay, we're already opening up this range here with just building large single prints, right? So what you're looking for now is, again, can this fill out more? Can we get above the 30-day again? Are we going to reject off here? Or are we just going to fall back into range? What we don't want to see is range rejection, right? We don't want to see this come down, do this, and break lower, fail to get acceptance here, and move lower and break down further, right? You know the ranges. You have awesome value. You have value above, value here, value back here. We know the range. You're still stuck between approximately 94,000 and 84,000. And I tweeted on Twitter, I said we were doing a 10K swing last week, and we did that, okay? Now is the time to be looking for proper entries. Are you going to get rejections, or are you going to get longs? I'll be honest, I'm very confident the next move is a closer leg to 74K before 100K. I'm very confident in that. Like, I think the 74K will happen for 100K, if you are even going to test 100K. Okay? So you know the ranges. Your guys' profile should look similar to mine. I will say that it's good you kind of have a composite building out in the middle range here. But again, you failed to still accept above into higher value, right? So you need to be mindful of where we are. There's not been any structural lows in yet. There's not been any structural acceptance above, right? The yearly open is still defended well. It still is defending. There's no acceptance above VWAP yet. Nothing. Nothing is flashed. Get bulls on parade. You know, get horny. Get fucking, you know, call up the hookers, right? You are still just range bound. And like I said, I think you're just going to be this way. But again, I would not be, you know, alarmed if we came down into 85 again. This, where it was trying to build out a low here, I think this is a great spot for Bitcoin to come down and for FOMC and go, okay, is the next leg up or is the next leg down? And again, you're looking for range rejections, right? You're not just like, okay, I hate this, go right down. You're looking to see if you get acceptance above, failure to accept above, bullish support, bearish divergence. And again, everything has still been in a kind of a bearish range, right? Like you're 36,000. What is it? 36,000. Yeah, you're $36,000 still down from the all-time high. Okay, you can't just sit there and be, well, I think Bitcoin's going to 300K because Trump's gonna say crypto is the most bullish thing in the world. Okay, listen, like you got to be able to look through the lens. This is trading. This isn't fucking the lottery, right? You know, just real quick here, but the bonds are still doing spooky things, right? We're not, nothing is safe yet, right? And the probabilities right now for the Fed meeting on December 10th on Wednesday is 88% chance of a Fed rate cut, right? I will say that in the previous meeting, Powell said there probably was not going to be a cut, and they're still missing a ton of data, okay? Yes, it is 90% rounding to doing a cut. This could easily change. Remember, this is what people are betting on, like they're like traders and the CME here, like this is basically saying this is what we expect. Remember, things can change. Okay, this doesn't mean it has to, it doesn't mean it can't. There's a lot of puts still on the table. There's a lot of economic data missing. There's a lot of geopolitical issues still going on. Okay? Do I think the Fed cuts rates? I'm not going to say what I think happens. I will say this. The bond markets are saying weird things. The yen carry trade is saying weird things. The Japanese markets are saying weird things. And they already said they weren't going to cut rates. All right? This can all change. There very well could be a rate cut. And honestly, the probabilities are there for it. But if there is a hold, maybe a spook hike, and people are disappointed, it will shake things up. And with the tensions currently going on in the markets, do not be surprised if this mysteriously all of a sudden does not happen and we don't get a cut, right? And another reason for that is you know, if there's a new Fed chair coming in the middle of the year, does Powell not want to be the one that sinks the ship if the new chair, Kevin Hassett, wants to run it hot and send the economy in for a wild ride, right? You have to be able to look through the lens and say, we don't know what's going to happen yet. We have to play the charts in front of us, not what we want. We have to play what's in front of us, right? A rate cut could very well send bonds and yields, you know, into very frothy territory, okay? So I understand everyone wants the bull market. Everyone wants 7,000 higher SPX, whatever. And we're 130 points of being there. But going into Wednesday, there's a chance that that could all unwind. And I've showed you guys the option positioning. I've showed you guys the net dealer positioning. And we're going to go into it in a sec here with the SPX. But do not be surprised if what everyone's betting is not what's going to happen. And that wouldn't be the first time this has happened, right? We've seen Volmageddon V1 and Volmageddon V2. You know, one of those might have been more ETF correlated, but we've seen surprise moves happen that catch every single person off guard, right? Okay, so this is the weekly composite here, right? There's a ton of overlapping value here that we can combine. If you guys didn't do this already, I'll just split it real quick. But you have all the way from November up to now, and there should be 3 weekly profiles here you can combine total, right? This is what it should look like. Your value area low is sitting here about 87,000. The value area high is sitting about 93. Your point of control is in this 91,300 to 90,000 range, 91,000 range, pardon me, right? We have still no yearly open weekly close above, okay? If this breaks, target to this 85K range, 84K range, pardon me, 84,500. We've explained this before, and I expect it to sweep there, right? If this breaks, start looking for these single prints back here to get fixed in the 70s. There is a little bit of a potential bounce area here where these single prints are, or I guess they were previously filled. There's a potential for a bounce here. I'll be honest, I think the move could be easily accelerated further down into previous value area, right? Like this we can combine back here. I don't know why that wasn't combined. I swear to God, TradingView doesn't save your stuff sometimes. Like, I don't know. Is that just me? Like, I don't know. I swear it doesn't fully just, you know, whatever. But there are single prints back here that have to be filled. You could easily fall back into the 60,000 range if the move becomes accelerated through the 70s, okay? You guys can see it here. Anything under 85 is pretty bearish, I'll be honest. If you get a rejection off 81 and you do, you know, some sort of thing like this and pull back, you know, target these single prints, right? And I would expect these single prints here to start ranging out, right? Like you'd probably start building a range down here in the 60s, and you'd ultimately decide if you're going to move up or go back down to the 50s range, right? Big composite profiles here. We could look back into the 40s, right? This is a big one here. This 42,000 range. You know, I'm not saying that happens now, but you would start looking for, if you didn't get acceptance back here in the 60s range, you would easily start looking for the move to accelerate lower down to here. Okay, so you guys know the ranges, right? Mark down your weekly value area high, your weekly point of control, and your weekly value area low, and then use the intraday, you know, on the daily TPO to chart out where you're going to be. On the SPX here, we have Gravestone into Doji into inside bar. Is that inside? I think that's inside bar. Into Hanging Man, into what would you call that? Inverted Dragonfly, inverted Hanging Man, inverted Doji. I don't know. Candle patterns, I always get them confused because there's so many fucking names, right? But we have now closed just above the range we had marked out. Your next level to look for is basically here, where if you can get acceptance above or not, right? So let's go and pull up the Greeks. This is the December 8th market maker positioning, right? You can see the iron corridor information here. If you guys don't know what an iron corridor is, I'd look that up. But you have net dealer long here at 68.55. Below that, the next strike you're looking for is to hold here at 68.50. This could be a pin on Monday, okay? This could very well be a pin. Keep this in mind. This is your pin above, right? They're expecting price to close in this general area. That's how an iron corridor works. There's a top range and a bottom range. You're expecting to close kind of in the middle. If, for some reason, the inevitable happens, the move accelerated under this will be quite fast, and you will start looking at some of these lower strikes, maybe in here, but just down here. I will say this: under 68.20 is very bearish. Pardon me. So expect price Monday to just float in this zone, and I honestly expect it to kind of just range for FOMC. Yeah, that's what I would expect for that. Real quick, let's pop back over to the net daily positioning. Where did we close last week? We closed right in the zone right here, right? If you can hold above this and get up, that's great, right? Start targeting up here. If you fail below this this week, the move accelerated down is fucking quick. And you would start looking for longs here, look for a pin here. If this fails, look for more accelerated acceptance below. Look for a long off here, look for the pin here. More acceleration below, start targeting closer to down here, right? We understand how this works. If you guys don't understand by now, maybe go back a few videos and just watch, but also take a look at vol signals and understand how dealer positioning options by strike works. They have a course you can buy, and this is not a shill. I'm not associated with them, nothing like that. It is by Dan, who is a former market maker. It's probably one of the better gamma tools out there, better market information you can get compared to a lot of grifting platforms out there. And it's a little more on the pricier side. The education is absolutely worth it, in my opinion. I'm someone who hates school, hates sitting and listening to shit. This has been some of the most fascinating data, tools, education I've ever fucking gotten that I've actually been interested in that has changed my whole trading perspective. Okay? And mind you, I never said short anything down here. I've never said that. Wait to come into the higher strike zones and see what happens. Because if you get caught shorting down here, you're going to get caught in a theta decay, you're going to get caught in an IV crush, whatever it might be. The trend hasn't flipped down yet. The issue we're into now is if we are getting acceptance above. We've talked about this on Bitcoin a lot. You need to see acceptance above. We know the pin is up here in the 7,000 range. We know all the negative dealer positioning is just above it. This is a very good spot where the market could top out, similar to how it did last year, where it barely got above 600 before falling. Everybody knows what's going on here that has seen this already on the channel and on their Volatile Signals' Twitter. Do not be the retail trader that gets caught, well, my trend line and SMA and RSI say this. Horrible tools. They'll never make you profits. If they do, you're very lucky. Okay? You can't look at shit like that. You have to look through the thicker lens, whether it's TPO, options by strike, you know, market Greeks, whatever. Do not be the guy that gets caught because, you know, Mike Alfred on Twitter said, just got the call. Fucking idiots, influencers like that. If you pay attention to them, you will get wrecked. And you will be taught a very valuable lesson, okay? So for the SPX side of things, we have a lot of value here we can overlap, right? We can go like this, into this, and, you know what? We actually can use this. We're going to. Fuck it, we're doing it. So, what do we see here? The acceptance area to get back into is up here at 6,900, right? And we know by positioning, the next position to look for is if this gamma wall here will act as resistance, right? We know that the point of control on the SPX is sitting right here at the all-time highs at about 6,900, okay? You are right here at 6,820. A little bit of back support here, like we explained, a big one back here, but remember, if you flip under this 6,820 level, the move's going to be accelerated down to fill the single prints down here, and we know from a Greek's perspective we could easily break lower, right? And I'll be honest, there's a lot of unfilled value back here, right? Like look at all this single ladder up. Every time these single prints have gotten filled, right? Be mindful that if this wants to break, it totally can. You're still under the value area high, right? So you did kind of get a close above the VWAP finally, which is good, but you don't want to fall back into it, right? You could easily do a fake out. We don't know yet, okay? This is kind of your weekly scope right now. There's a lot of single prints back here on a weekly time frame. Again, I'd probably mark this down where these single prints are on your regular trading charts, you know. But I understand that if you get acceptance under this, the move is accelerated down, right? So we know from a Greek's perspective, we know from a TPO perspective, okay? Mark these ranges out, right? Use your intraday scalping, like I said, Bitcoin, but mark the weekly areas out so you know what's happening, right? You need those higher time frames to make your intraday move correlate, if that makes sense, right? Because the higher time frame is always going to tell you more about what the positioning is going to result in, right? That makes sense? You can't make you're not going to make money on a 15-minute chart. You can just watch it, see what's happening, see what the moves are doing, but ultimately the higher time frames are going to show you what the next move is, right? So again, if we can get acceptance above, fantastic, right? But we're right at the point of control here from the weekly time frame on the all-time high. The daily still has to be retested. So again, look for acceptance above, look for acceptance below. What's it going to be? Markets can go up, then go down, then go sideways. It's up to you to execute and do what you want to do. You guys know I'm more to the bear side. I think we're just in a huge fake out range. But yeah, do what you want. Since I'm on the weekly, we'll do the weekly QQQ first. QQQ looks all right. It looks like it's trying to fill this gap that was in here. These single prints up here still have to be filled, as well as this point of control has to be reclaimed. We closed right under the value area high, which is really interesting on the weekly time frame. Again, lots of single prints down here, and if this fucks off down here, it's really going to drag the S&P down, right? Because the S&P is primarily tech-based. QQQ is made up of mostly tech stocks, the Mag 7. So be mindful of that. This here, oh, look at that, Cray. You missed one. Yeah. So there's that 620 point of control on the weekly. You can get acceptance above. That's good. We're holding above that. That's fine. Great. But again, look for rejections off of here. Look for acceptance above. Okay? Mindful of the single prints back here. On the daily. All right. So we got some value here we can combine. We can combine this. We can... That's not... You know what? I think that's fine. We're gonna. And we can do this. Boom. Look at that. Not perfect, but I think it's worth using, right? Like, acceptance of the value area low, push up. All right. You guys know the levels we showed on the weekly, kind of what's going on. Again, you kind of just have to get into this 630 range, right? You know, I'm telling you guys, TradingView does not save some of this shit. Yeah, like, why is this not... Well, whatever. But I don't know why it does it. It's like it doesn't save... Wait, do I have to manually click, but I have autosave on, do I not? Yeah, so... Whatever. Anyways, you guys know on the weekly perspective, you guys got to get above that 630 range, right? QQQ's just hovering here. You know, the close was right at the point of control, which is interesting. I wouldn't want to see, you know, if you get a pullback into 622 and it bounces, great, right? But I would just be careful that if you get acceptance below this, you know, look out below and start targeting those lower areas, right? So again, mark down those higher time frame single prints, mark the value area low, value area high, point of controls. They do help. Okay, but again, we talked about this just on the weekly while looking at it. Look for, you know, any invalidations that you might get above that might come and fill some of this lower area here. Yeah, that's really at the QQQ. I mean, it's just, I don't know. It is lagging a bit behind the S&P, but I don't know. Again, you guys are gonna know Wednesday what the next move is, right? I don't want to sit here and be... I don't know. I'll be honest, Bitcoin's been the most interesting asset to trade personally right now. S&P's kind of just been ranging, doing a slow grind up into resistance. It's just, I don't know. Yeah. Okay. We're going to talk about the VIX now. So, the VVIX here, it did kind of break out of the little wedge we had going on. Are we going to get something like this and break down? I think we are. And I'm going to show you why in a second. That's going to validate this scenario. Right? On Mondays, the VIX is a broken metric, right? If you see the VIX spike on Mondays due to option rebalancing, dealer rebalancing, there's a couple little niche things in there to why that might happen. But the VIX on Mondays usually does rise. You might come back into this zone, right? What I'd be looking at is this here. So VIX sits at 1528 just above, put support at 15, indicating a sensitive zone. Negative gamma dominance for 15.925 implies any break from here could ignite volatility. Traders may want to brace for sharp moves, especially if the VIX breaches these bounds. What do we see here? Dealer hedging in the VIX. Dealer hedging in the VIX. Acceleration below, VIX to make a new low. But this is dealer hedging, meaning it's going to hold the VIX here, right? Accelerated moves into positive gamma. These are very little gamma points. These are very easy to get above. Very. These are not big gamma walls. Remember, big gamma walls, that's resistance. Little ones, so let's just say theoretically this looked different. Let's say this 21 strike, the green was out to like here. That's a call wall, right? To get above that, boom, the move's accelerated. But right now, this is all very little resistance. Any move above this, you can absolutely fucking rip higher. Huge dealer support here, helping long move up, right? Remember, below these is accelerated down. At them is accelerated higher, right? So you hedge here as a dealer to lift. Below the break is the rapid acceleration down. If You pop off of this and get into this, you can rip right to 30, no problem. Okay? Going into that expiry we talked about, there's the JP Morgan wall. We've talked about that before. You have to see, coming into that week, what's the closest strike? Is it 7,000? Is it that 6,300 range? Remember, they hedge into that. This could make things get haywire. And I've said this for the last few weeks now. The next 2 weeks are very fucking volatile, right? So there's a very good chance that this VVIX VIX could just do this and break in below. I'll be honest, looking at the VIX, does not have much further down to go by any means, right? Even when we popped off from the tariff low, where was the tariff low? That was April. Where's the VIX? Where's the VIX? VIX. Right? So into August here, you didn't even really break below this. Did we get dailies? We got very few dailies below the support line, right? The lowest on the VIX is down at like the 9s, if I'm not mistaken. Yeah, it's down at the 8s, right? By no means has this market, regardless of how up it's been, has said that, you know, things are okay. The VIX should be way down here if things are great, right? This has been elevated the whole time, and it's been, you know, it's kind of been flirting with that up and down trend recently. There is absolutely the scenario here that could build out for this. And I'll be honest, if the VIX spikes within the next 2 to 3 weeks, how option hedging works, the first bit of Q1, which would be late January to, let's go late January to March, right? Because the end of it would probably be April. End of March would be, you know, so let's say this. If we did somehow get something like this up with the VIX, you know, maybe even targeting 30s, and it's possible. It's never been more easy to get right now. We've explained the Greeks, we've explained the JP Morgan collar wall, everything. Then Q1, I firmly believe, is going to have some sort of crazy correction. Okay, if this just fucks off and sits down here and, you know, invalidate that thesis, by all means, you know, bulls on parade. If this curls up within the next 2 weeks and decides that she wants to go, the move is absolutely going to be accelerated. And again, I know I keep repeating myself. The time for anyone to get caught off guard is literally right now. Is this week and next week is literally the best time for retail traders, institutional traders on the wrong side of the curve to get absolutely dicked. Absolutely dicked down, right? Like you could be daddy's little good girl. That's literally how it could be right now, okay? You would never see stuff like this. I mean this from just like an RSI perspective, right? Like this doesn't tell you anything, right? Doesn't tell you anything at all, okay? Understanding market Greeks for options is very important. So, going into the next 2 weeks, look to see, is the position going to get hedged up here, or is the position going to get hedged down to 63.30? I'll be honest, the time for it to sweep lower is now, is right now. If this is going to play out like the 90s algorithm did for the SPX, the time to drop is right now, right? We know that. But you could get a little rally into Q1. But I've said this over and over. I think, and I firmly believe this, that Q1 is going to be a bloodbath. But I do see a rally into the middle of the year. I see a rally into at least October of next year if we get this major drop. I don't know what's going to happen, okay? I have a good idea of what could happen. And I'll be honest, this is what we call a stalling star pattern. Or is it called a stalling star? I don't remember the exact... It's called a stalling rise or a stalling star. I kind of forget what the pattern is, but let's just look at, let's see, do we have, you know, you could easily get something like this where you just make a double top and you fall down, right? You're in a stalling pattern here, right? And we said at the start what the stalling looks like. So be careful. That's all I'm going to say is be careful. Anything is possible right now, all right? I think that's all I really need to cover right now. You guys can go into the S&P sectors and stuff and look yourself. But again, you know, like the Japanese market overnight kind of looks a little weird. Nasdaq's pretty flat. Futures pretty flat. Gold and silver still kind of just range bound, kind of doing their things. Yeah, like, I don't know. Oil, actually, oil could actually rip here. theoretically. There's actually a potential move here for oil. Yeah, wait, this is a bull flag kind of. Huh. Okay, keep an eye on that maybe. That could happen. I mean, geopolitical tensions, yeah, that's probably why. Credit spreads here. Look, kind of coming into that range where I said that what did I say? I think I said 2.85 to 2.9 range where there's a chance for them to bounce. And again, they're fairly elevated from where we are in the SPX. What about the yield? Yeah, the yield one's even still. Keep an eye on that. All right. Listen, you guys know the move. I'll give you guys one NVIDIA trade here. We're going to use this as well. So if we look at the range we're in, right? If you can somehow get through these big gamma walls here and accelerate and push through this 200 wall, you get a crazy move. But I will say this, the minute you fall into this lower end here, I mean, you would start targeting this 160 zone. Okay? So look for acceptance into that 900 to 200 range. If 200 rejects, by all means, just short it. But it's, I don't know. I don't know, man. NVIDIA it does not look good. I don't know. So be aware that you can easily accelerate down to this 160 level if these big call walls here get rejected, especially this one at 200. So there's a trade idea there for you. Anyways, that's all for me. I got some stuff to do. I gotta code some stuff. But yeah, hopefully this helped you guys out, and we'll talk to you on the flip side.